Hey guys, can you hear me?
Yes, Sarthak.
Okay, great. Let's give a couple of minutes for folks to join and then we'll get started.
Okay.
Hey, Sarthak, are you also recording it so you can put it up, or we will allow us?
Yes, I'm recording it in my local.
Awesome.
You guys must be seeing the session is recorded, right? At the top.
Probably,
Yes,
yeah, on the
yes,
top.
we
Yes.
Okay, great. Yeah, we'll start at 2:03.
Hey Sarthak, Vinod here.
Hey, Vinod. Yeah, we're just waiting for one more minute and we'll get started.
Yeah, sure.
Okay, let's get started. First of all, thank you everyone for joining this session. I did promise a session at the end of last one that I'll be going over technical analysis. I'm sorry about the delay, but hopefully this session would be beneficial for most of you. I know I've asked for some feedback or some questions which folks had. I won't be able to cover all of them, but I've tried to address the most common set of questions which most of you had. So hopefully by the end of this session, you guys would be in much better position. And I'll take the questions as we go on the same topic. But for general questions, I plan to leave some time at the end of the session. Okay, that being said, let's get started. So first of all, the usual disclaimer, the following content is for casual learning in a non-professional setting. The information in the presentation, including some example of security, is strictly for illustrative and educational purpose and is not to be construed as endorsement, recommendation to buy or sell. Please consult your tax, financial, or legal advisor before entering any investment. I'm neither of the above. I'll try and walk through each section by examples. For detailed definitions, please Google them later. Okay. So this is what I plan to cover in today's session. Importance of timeframes, support and resistance. I know most of you had questions around how to plot support and resistance. So I have a bunch of examples which I plan to go over. Then importance of candlesticks and chart patterns, indicators, what indicators do I use and what indicators I recommend using. Then we'll probably go over one example of how I analyze a ticker. I think that this is something which will be interesting to most of you. Then at the end of it, we'll go over question and answers. Okay. So the first one, time frame matter. What does that mean? So whenever you are referring to a chart, you need to know your time frame. Like for how long do you want to invest in a commodity or a stock, whether it's yearly, 5-yearly, or month, or even beyond that, or on a shorter time frame. So in every chart platform, you'll see this monthly level, weekly level, daily level, hourly, or 5 minutes. Even you can break it down to a 1 minute chart too. But I recommend sticking to it to the 5 minute charts, only just to 5 minute chart and not go below that. So breakout and a breakdown on a larger time frame have higher chances of success than lower time frames. What that means is breakout on a weekly time frame will have a higher chance of success rate than a breakout on an hourly time frame. So the more you zoom out and the more signals you find after zooming out, the better chance that the trade you are entering would be successful. Know what's happening on a larger time frame. You don't want to go long on a stock just based on the daily time frame if weekly pattern is bearish, unless it's at a weekly support. Follow the larger time frame trend for long-term entry. We'll go over examples. I know most of you would be having questions on this, but just bear with me for a couple of slides. So what this means is if on a weekly time frame the stock is trending down, and on a daily time frame you think that it's at a support and it's acting better to go long, just zoom out and look at the weekly time frame. If your weekly time frame is supportive of that move, then the chances are higher. If the weekly time frame is bearish and you want to go longer stock, higher chances are that you will be stopped out, unless you are actually acting on a support line on a weekly time frame and then timing your entry. We'll go over examples, but just be mindful that it's better if you are going to invest for a long term, look for a weekly or a monthly time frame to see the overall picture of the stock. Then long-term trading at higher time frames, short-term trading at smaller time frames. Don't mix short-term trading with signals from higher time frames and vice versa. What that means is if you're trading for a year, if you want to keep a stock for a year or 2 years, 5 years, then it's better to trade on a daily or a weekly time frame. But if you just plan to hold for a few hours, few days, then probably you can go to a lower time frame like an hourly 15 minutes or a 5 minute time frame or a 4 hour time frame. Don't go, if you want to hold a trade for a long time, like a year or so, then just don't go by an hourly signal, because most of the times that would be a stopping out signal. So bear in mind, whenever you should know your time frame. Whenever you are entering a stock, how long do you want to hold? Do you want to hold it for what time frame? And then look at that chart to see if that aligns with your hold period. Okay, that being said, this is an example of a weekly breakout. So KWeb, this is a Chinese internet ETF. See here, these are support and resistance. We'll cover support and resistance in the subsequent slides, but this is a trend line here. Look at this point around 56, and this is a weekly time frame chart. So each candle, when I say weekly time frame, each candle corresponds to 1 week of trading, like 5 days of trading. Similarly, basically, if I'm talking about monthly, each candle will represent 1 month worth of data. And when I'm talking about daily, each candle will represent 1 day of trading data. So if you see here at 56 level, there were multiple, this was a resistance, this was a resistance, it broke out. As soon as it broke out, in just 3 weeks, the price went from 56 to almost 66. This is a trade I actually took. Initially, I was short here because it was coming from multiple resistances. But when it broke out, I thought this is a breakout on a weekly time frame, which stood out to me. And that's why I immediately reversed my trade and went long here. So see the importance of weekly breakouts. A couple of resistance lines here. And as soon as it broke out on weekly, from 56 to roughly 66 in just 2 or 3 weeks. So that's the power of a weekly breakout move. You'll see more examples later, but this is what I meant on a weekly breakout. Similarly, okay. Any questions on the time frames?
బేసికలీ పెద్ద స్వింగ్స్ మంత్స్ స్వింగ్ చేయాలనుకుంటే స్టాక్స్ అన్ని తీసుకుంటే లాంగర్ టైం ఫ్రేమ్ లో తీసుకోండి, లేకపోతే షార్టర్ టైం ఫ్రేమ్. అది ఆ అనాలిసిస్ ఇందులో మిక్స్ చేయదు. ఈ అనాలిసిస్
Is that a question? Sorry, somebody was talking. Sorry, I didn't get the question.
Sorry, I mean, I don't have any question. I was just
okay. Got it. Okay, if no questions on this, the time frame, then we can move on to support and resistance. Okay, support is a level at which demand is strong enough to stop the stock from falling any further. The rationale is that as the price drops and approaches support, the buyers become more inclined to buy and sellers become less willing to sell. Similarly, resistance is the level at which supply is strong enough to stop the stock from moving higher. The rationale is that as the price rises and approaches resistance, sellers become more inclined to sell and buyers become less willing to buy. Previous support becomes new resistance and previous resistance becomes new support. I'll go over an example of this one. This may be an area, not an exact point where prices may react. So this is not something 100% needed or not followed all the time. This is an area where prices may react, which is highly probable area, but it still may. It's not certain that it is going to react. You can find support and resistance at any time frame. Now, prices usually respect support and resistance of higher time frame. Monthly is greater than weekly is greater than daily. That's what I showed in the previous example. If it's a breakout on a weekly time frame, then it stands out. It's something which price respects that weekly breakout, and higher chances are when it's breaking out on a weekly time frame, it will follow the trend and move up. So let's go over, okay. Yeah, types of supports and resistance. One is horizontal. We are going to cover examples of most of them. So types of support and resistance, one is horizontal, the other is trend line, the angled line which you saw in the graph, in the previous graph, then channel support and resistance. Now, how to find support and resistance? Zoom out to higher time frame and draw obvious areas first, then multiple touches around the same area. More touches means stronger support and resistance. So yeah, I'll go over these points with an example. Now, how to position yourself at support and resistance. So usually this is the question which is being asked by most of the folks that, okay, you can spot a support and resistance, but how do you act? Do you buy, do you sell, what do you do? Or exactly what is to be done at a support and resistance? It depends on where you are. If you're already if you are already in a position and you see a resistance approaching, either you sell all, you sell 50%, you sell 20% and wait how the price reacts. So it depends on person to person, but I usually, if I see a resistance, I try to get out of the position or maybe buy puts and then basically see where we are, because usually price respects support and resistance, especially if we have a confluence zone. What I mean by confluence zone is if it's a support from multiple touches, as in if it has proven to be a support or a resistance multiple times, then I think I feel that that support or resistance is strong enough. That's why I ideally get out of the position. Then I also look at how prices are reacting to that support and resistance. Do we get a hammer or a doji candle? Do we get a gravestone doji at resistance? We'll cover some of these name. I'm not sure if you guys are familiar with those, but those are type of candlestick patterns. Now, another example is congestion at support and resistance or a quick reaction. So at a support, usually what happens is price is just consolidating. It's congestion. It is going through a congestion period. So what that means is it's trying to, basically buyers and sellers are trying to make a move or try to position themselves before a big move. If there is a quick reaction, usually quick reaction means immediately it hits the resistance or a support, then goes up or goes down depending on if it's a support or a resistance. So you need to look at how the candles are reacting or how the price is reacting when you hit a support or a resistance. Then see where moving averages are relative to the price. We'll go over moving averages in detail as well. Then see if it has confluence with multiple supports and resistance, which I covered in the first point itself. I know I talked a lot about support and resistance. So what is a support or a resistance? So let's go over, let's go over this one first. This is Apple stock sometime from May to 2018, 2019. Let me grab a pen here. So if you see this area here, the price hit once 182 level, it came down. Then again, the same area it hit once, then came down. Then again here, then came down. So I know that this line 180 to 182 area has been acting as resistance. So I know when it comes next, when it comes there next time, I can expect a reaction. I don't know what, whether it breaks out of resistance, goes up, or breaks down again, or goes down. So what I do is, if I'm positioned, if I bought a stock here, then I'll probably reduce everything over here or go out of the position and then see how candles are reacting. If it breaks out, I will buy it again. But if it breaks down, then my thesis have been proven correctly, and then I don't have to bear the losses which otherwise I would have if I have kept the position. Then when it broke out here, it went up. Then again, same area. Now remember what I said here. Multiple, the smaller, this one. Previous support becomes new resistance, and previous resistance becomes new support. Just keep that in mind. And when you see here, this was a resistance area. We knew that this is a resistance area. When it came down to the same area again, it held this support. Now this resistance, the previous resistance, became the new support. It held this area beautifully and it went up. Look how many points you could have scored. It's not even funny. Then when it came down again, you knew that this area is point of interest because it has been acting as support and resistance for a while now. When it came down, it just went through the support, it went down, then it again tried to broke out. Now this area acted as resistance because the support has been broken. Now it again tried to go up, it couldn't, and it went down this much. So see the importance of this line. Once the resistance is broken, it acts as support, then it goes up, then when again it breaks, it acts as resistance. So that's how you plot support and resistance, basically multiple touches of the same line or the same price. Now, if you look at this support and resistance, this is called channel support and resistance. See how channel is drawn here. Now, if you see here, this is AMD daily time frame from 2017 to, covering basically 1 year of AMD. If you look here, 1, 2, 3, 4, 5, 6, almost 7. Let me grab the pen. 1, 2, 3, 4, 5, 6, and then 7. And similarly at the bottom here, you can call these conversion, this. Now, if you see this chart, it's so it looks so easy in the hindsight, of course. Like you could have easily traded this. You could have went in. You could have bought here, sold here, bought here, sold here, bought here, then sold here. From 8 to 13, you just see how this wave is acting up. It's like the support and resistance are being held beautifully. So this is called, this is basically channel support and resistance. Let me remove. Okay. So now what's happening? Let's try to understand more why the support and why the resistance. So with the first hit here, we don't know if this point is going to be a resistance in future. You can't, with just one price point, you can't just make out whether it's a support or whether it's a resistance, whether it has become a resistance or not. You need multiple occurrences on the same price point or the same channel. Now, when here the price got rejected and came down, this had become a support, or this had become a resistance at that time. Now, if I'm trading AMD during that time, I know when it hit this level next time, my trend line would have been drawn from just these two touches. So I would have extended this trend line here, and I would have waited for price to come here and short, and similarly price to come here and then short, similarly price to come here and then short. Similarly, when I drew this line at the bottom, this is support. When the price came here, I would have bought here, I would have bought here, I would have bought. And this is daily time frame, so you get a lot of movement, like from $9 to 13, similarly 9 to 13. Yeah, so that's huge. I agree we can't get all of the price or all the gains. We would have probably sold somewhere here, went half, or reduce the position over time. But this is a low risk entry. Similarly, if you are buying a stock, this is a low risk entry, low risk entry. When I say low risk, this has held multiple times. This support has been held multiple times. So if you want to get in here, you can just put your stop $1 or $2, depending on your risk appetite, below this, and then just get out if the support doesn't hold. Compared to if you want to enter somewhere in the middle, like here in the choppy zone, if you are entering here, you don't know from here if it's going to go up or going to go down. From this section, you see now in the hindsight, because we are past that time, you see that it has gone up. Now one might say that, okay, from 11.5 to 13, still a lot of point. I could have gained that. But how do you know it will go in this direction? If you see this area, if you've bought here and sold here, chances are high that you would have bought over here again, anticipating that it's going to do the same thing here, but it went down. So see, this section and this section, it probably looks like same, but the results are different. So that's why the risk reward is not in your favor. You would like to buy, when they say buy low and sell high, this is what they mean, that buy low, buy at a support, and don't buy in the choppy zone, or don't buy somewhere in the middle, because you don't know what's the next outcome is going to be. Of course, you don't even know what the next outcome here, but this is just probabilities we are talking about. You have less chance or less probability of being stopped out and more chance of getting profit over here. Now here, let's talk about this resistance. Now I would have probably shorted the stock over here because it has proven to be a very big resistance in the past. So I don't know how prices are going to react. There are multiple choices. If I don't have any entry, then I'll wait whether it breaks out before entering a short position, because I know that this has been a resistance, but I don't know whether it's going to be a resistance right now or not. So if I bought a short put, or if I bought a put, then my stop would be just right here and I would have stopped out. And similarly, when it broke out, I know it broke out, and that too on a daily time frame with a 1, 2, 3, 4, 5, 6 touches previous to that occasion, then I would have probably jumped in and bought the stock here, because it's breaking out from a very good base. This is called basing action. It basically broke out from a very good base, which will have a higher chance of breaking out on a multiple time frames, and then higher chances of going up in the near future. So I think from here, AMD never looked back, and it's at $50 stop now.
Sarthak, would you react differently to buying an option as opposed to a stock whenever there is either a resistance or a support?
Yeah, that's a good question. It all depends on the time frame. Like this is a daily time frame. As I said, if I were to take a position over here, I would have probably gone in with a stock, because it's basically breaking out of a consolidation zone or of a base, and it has higher chances of going up. With option, even if it do like this, consolidates here, my premium is going to decay and I will not probably gain that much. Otherwise, if it would have proven a breakout, as in if it would have broken out here and it would have consolidated after a breakout, then I would have probably bought an option. To your question, it depends on person to person. There is no single answer, stock versus option. It depends on how you want to position yourself. Stocks basically gives you more freedom, as in more stop, because it doesn't have too much slippage due to premium. Versus option, that's something the premium is something which you need to consider, and the time decay is something you need to consider.
So would you say that at breakouts, especially at support, your options always pretty much will react with higher premiums on most stocks?
No, I won't say that. It will depend, as in the premium or the implied volatility that doesn't change with a support or a resistance. But the problem here is I don't know if it's going to break out or break down, and it might consolidate here for a bit. And that consolidation will cost me time decay in an option trade. And that's the reason I'll hold stock over option if it's right here. If it has broken out, yes, then I can position myself in option as well. Does that address your question?
Yeah, it does. Thanks.
Cool. All right. Any questions on this chart? Cool. Let's go
So
to.
I have a question. So how you confirm that if it breaks out or it's a fake out or breaks out?
Yeah, so that is what I'm going to see how the prices are reacting. I might not position myself here. I want to see how it's reacting here, as in if it has broken out or not. If it's a false breakout, then I'm going to stop out, and that's the opportunity risk or the opportunity cost which you anyways put in when positioning yourself. You can't,
Okay.
yeah, you can't tell whether it is going to be a false breakout or a false breakdown. That's something you just have to acknowledge, that there is some risk by in investing and trading, and you have to go forward.
So
Yeah.
so can you tell me, is there any second confirmation or third confirmation we can consider, like if the candle closes above the resistance line, then it will be a confirmation of that is a breakout and not a fake out, like that?
Yeah, that's actually a good question. But in this case, or particularly here, if it's you'll have to watch at the lower time frames like hourly candles and see how it's reacting, if it's rejecting from the previous resistance or not. If you see here, I might draw a line over here. This is a resistance in itself, and this is a resistance. Basically here the prices are rejected. So if I draw a line over here, only when it goes above this point, I know that it's a true breakout and it's not a false breakout. So I might wait for a second signal by drawing one more resistance over here, and then go based on that. To your question, when you mentioned that if a candle closes above some part of the previous candle, that can still reverse the very next day. If there is some bad news, some Trump tweet or something else, it can still reverse. So there is still a chance of a fake out or a fake breakout, and you still have to position for that. But I will basically see multiple times if there is a congestion just before a breakout, then most chances are that it is for real. It's not fake. Like here, if you see in this case, just two candle gone down. Similarly here, one candle gone down, one candle gone down. Here, I would say that in the same range between $12.50 and $13, there have been some consolidation. This is where buyers and sellers are basically fighting, and the buyers won and they just broke out. So consolidation right at the resistance is a good thing for if you think that it's going to break out. But of course, in all the cases, it might not hold true.
Oh yeah, good. Thank you.
Sure.
Hey, I have one question.
Sure.
So this is a multi-year chart, right? So when you're taking a day trade position, so what chart are you going to look at? Is it a daily chart or a weekly chart or a monthly chart?
Yeah, that's a good point again. I'll probably keep that question for the end, where I've discussed about smaller time frame trading and other aspects too. I'll note it down and let's get back to that question once we are
Okay.
done.
Okay.
All right, let's move on to this one. Yeah. So we talked about multiple types of supports and resistance. Similarly, this is a zoom chart. If you see there's a horizontal support, it's so clearly depicted here. It's not even funny. I just drew a line. It respected it multiple times here, came down. Here it tried again, multiple congestion points here. It broke out, then retested, and then it never looked back. So this is called pullback to support, then breakout. As in the when I showed you Apple's chart, this is what happened. This was resistance. When it broke out, now it's testing the resistance again. It's called pullback to support, and then it broke out. So this area would have been a very, very good low risk entry. Why low risk? Because if you would have entered at $103-ish, your stop would have been just $1 or $2 below, because then you knew that this support has broken. This is no more a support. It can go down further. You will position yourself. Now from 103 to almost 250, of course, that's unreal. But people hold. I mean, that's the beauty of these daily and weekly time frames. If you want to hold a chart or a stock longer term, just look at these charts and you could have easily bought here, and even now you could have been in trade. Okay. So this is this is how horizontal support and what angle support and everything acts. There is one more example. Yeah. Yes. When I talk about multiple time frames, or when I talk about monthly or weekly time frame, bigger time frame, look at this. This is SPY or SPX. Look at this chart here. This is a monthly chart of SPY, which is S&P 500, from 2000 to what, 2012. This is just two lines which I've drawn here, and everything you can see for yourself what we've discussed before. One touch, two touch, gone down. One touch, multiple touches, gone up. From $80 to 160, double. This is S&P 500 we are talking about. If you've taken a position over here, if you would have seen this market, or if you had seen this chart at that time, you could have went long multiple stocks at that time, not just SPY. You could have actually seen that this market is kind of bottoming out here, and it would have been good for almost 100 or double points from 80 to 160. Similarly, this was resistance. This was from here, the prices got rejected previously. So we'll anticipate that it is going to reject over here as well. Then it went down. Similarly, the support. So this is an example of failed breakdown per se. So you see that this was the line, it broke down, but it immediately recaptured this level and went up. So failed breakdowns and failed breakouts, that's something you can study more offline, but I just wanted to touch upon it, that this is something which you need to consider. If I was taking some long positions over here, thinking that my support is going to hold, then I would have definitely stopped out over here because it broke down. Additionally, even after stopping out, next day when I see, or after a few days, I saw that the prices held this line and are going up, I would have positioned myself back again. So I would have bought those security, this one or the others which I was in, back again, because this is failed breakdowns and failed breakouts are very good signals, very good reversal signals. As in, the prices are not going to go down. This kind of confirms that here, the sellers tried to dominate, but the buyers didn't let them dominate, and the prices just moved up. And see how beautiful, from 80 to 211 and even beyond that. And this is the beauty of monthly time frame. Notice here, this is monthly. So each candle corresponds to 1 month of trading. That's why anything monthly, weekly, just notice that, and you can take positions accordingly, because these are double. I mean, from 80 to 160, these are almost double the positions. So this is the beauty of support and resistance. This is very, I won't say simple, but that's something which will come over time. You just need to match the dots here. Wherever there are multiple areas of interest, like multiple price point rejections or supports, that's what you plot, and you see how your trading might improve, because this is the basics of trading, just support and resistance. Even if you remove all the moving averages and everything, you just have these lines, these candlesticks on your chart, and just trade it off of this. And of course, apply some risk management. You'll of course do well. This is a proven technique. Why prices always react over here? Because of the fact that buyers and sellers see these prices as areas of interest. Last time, exactly here, the prices got rejected. So if I am a seller over here, I might think, okay, this is where I'm going to start selling or short selling or buying puts. And if I'm a buyer who bought over here or here, this is where I start reducing my position, because last time it had rejected from there. And that's why these positions become, or these points become even more interesting, and that's why the prices react.
Yes, Arthak, one question. Do you consider volume as one of the factors, especially while deciding whether the breakout is real or false?
Yeah, very good question. So I know lots of traders do consider volume, but in my charts, you might have seen I don't have volume at all. That's something which I've got accustomed with. I used to do volume trading based on volume, but as I mentioned in the agenda, I think I mentioned that the less signals, the better. There are chances, or there are times where I've seen if there is a high volume breakout, usually people say if it's a high volume breakout, it's there to stay. It's not a false breakout. Similarly, for a breakdown, if it's a high volume breakdown, it will stay. But I've seen the reverse is also true. So I didn't want to fog my judgment based on just the volume as well. That's why I've removed volume in all of my charts, and I don't trade off volume. But that's just me. If you are confident trading with volume, feel free. I know plenty of folks do trade with volume, so I'm not discouraging to not have volume, but I don't trade off volumes.
Okay, thank you.
Yep. Cool. Okay, so any more questions on support and resistance? Okay. If not, then we can probably move on to the next one, importance of candlesticks and chart patterns. So in the next few slides, I'll show how to read candlesticks. Of course, we don't have time to go over all the candlesticks pattern, but I'll try to touch some of the important ones, some of the reversal candlestick patterns. Then always wait for confirmation. Don't just base your trading off of one candlestick. Like if you see a hammer being made, don't just blindly go and buy. See where the hammer is made. Is it at a support? Is it at a resistance? Or how the price is reacting? So these are just some tools to add to your trading trading library. I won't say that this is something which you need to do, but this will help in confirmation of your thesis. Then some chart patterns. These are the patterns which repeat over and over again. Cup and handle, head and shoulder, bull flag, bear flag. Most of you might have heard that. We'll go over some of those too. Then chart pattern can provide you with the potential targets as well, like potential profit targets. Like bull flag, you know that from pole, or I'll show you with an example. Bull flag, what profit or what potential target pattern targets can it have? Moving on. So candlestick, this is a candlestick at glance. I took this chart from forexelite.com. I found it very informative. So this is how a candlestick works. I don't know how many of you are familiar with it. I'll quickly go over. There are lots of YouTube videos on candlesticks, which are quite good. I recommend going over those if not already. But I'll tell you what a green candle and a red candle is. So these are called the wicks, the top and bottom, this one and this one. This is upper wick, of course, this is a lower wick. Then for a green candle, what green candle means is open is lower and the close is higher. As you can see over here, the price opened somewhere here, but the actual close was higher. So why is it green? For primarily the same reason, because the open was less than the close. So let's say price were 98, it opened at 98, but the close was at 100. So we had a green candle. The opposite is true for red candle. It opened at 100, but it closed at 98. So it's a red candle. That's why a bearish and a bullish candle. So here there are some neutral candlestick patterns. Doji. You might have seen me talk about doji. This is one of the primary neutral candlestick patterns where buyers and sellers are basically at fight. Nobody won. This is right in the middle. So what it means is priced, open, close, somewhere here, there, but this is where price open and this is where price closed. So okay, let me give. So in a doji, price open close is exactly at the same place, or not exactly, but very close to the same. So this where the body is here, we'll open and close will be here as well. We can go up and down during the formation of the candle, but the actual close and open would be very close. So that's called a doji. Similarly, spinning top, you can just read all those up. But why I wanted to touch upon candlestick is bullish candlestick patterns, this hammer candle. So you'll see this hammer candle. What it tells you is that it opened somewhere here. You guys can see my cursor, right?
Yes.
Okay.
Yeah.
It opened somewhere here. It went down all the way to the bottom, but it closed at the top. This means it opened here. There were sellers, a lot of sellers. They wanted to take the price down. They couldn't. Buyers came in full force and closed the candle at the top. of that particular. So each candle can represent month, week, day, 5 minutes, 10 minutes, 15 minutes. We don't care. I'm just talking about the candlestick patterns here. So here, just to repeat, it opened over here. Then the sellers came in full force, took the price to the bottom of this section or the wick, and then buyers came in full force and closed it at the top. So just by looking at this hammer, we can say that buyers did win, or buyers had an upper hand over here. Now, just if you just have hammer, or if you just trade off hammer, you might get success sometime, but it would be about 60-40, I would say 60% success if you just trade off hammer. But it depends on where the hammer is formed. If you apply this hammer, and if it's forming on right at support, if you see one of the hammer, I don't have a hammer over here, but there might be some charts in future where you'll see a hammer. If a hammer is formed right at this support, then very high chances that it will reverse. So that would be just one candle you can trade off. That is why you need to see the confirmation. When I mentioned in the previous slides, wait for the confirmation. Hammer, just one candle, usually you should not take a trade. It depends on where it's forming, but you should wait for the next candle. So if the next candle is above this hammer, this one, then it's basically formed a 3-candle reversal pattern, and usually prices go high from here. Now, whatever I tell you here, just go back after the session and try to see multiple charts and see where it's applicable, or if it's applicable or not, or what exactly do you see on the charts. Most of the time, you'll see a false signal as well, but that might be due to some or the other reason. Maybe it's right at resistance, or you need to see how the prices are reacting for these candles. But these are some good tools to have. Similarly, I'm not going to touch upon all the candles, but bullish engulfing. Bullish engulfing is something which engulfs the previous candle. The previous candle or the previous trend was down. This bullish engulfing, it basically engulfs the previous bear candle, and it goes up from here. And the opposite is true for all the bearish candlestick patterns. Like shooting star, it opened over here and then went all the way up. So all the buyers would have probably bought over here, then sellers came in full force and closed it over here. So this is a shooting star, just the opposite of hammer.
Sarthak, do you use candlestick pattern for day transaction? And if yes, what's the time span that you use?
So yes, I do use candlestick patterns for daily trading, but 5-minute candle is what I use in day trading. But that should be formed on multiple supports, like VWAP on a horizontal or some support. I don't trade just off of this hammer. If I see just one hammer and without any support, I won't take a trade on that. But if a hammer is forming on multiple supports, then yes, I will go take a trade, and I'll trade off 5 minutes.
Oh, okay, thanks.
So, okay, these are candlesticks. So these are the common chart patterns which I talked about, like bull flag and cup and handle and other stuff. So this is called a bull flag. I'll give an example after this in actual trading, as in actual chart, which I wrote up. So if you see here, this is similar. This is exactly like a flag. Here, how do you see a flag? So this pattern, if you see here, this is almost like a flag. That's why a bull flag. This is called a pennant. This is called a cup and handle. You'll see a cup, a handle, and breakout. You'll see ascending. I'm not going over each of those and profit points and everything. You can read it up. There are lots of YouTube videos, but these are very important patterns. Why important? Because they repeat over and over again and on multiple time frames. So this is something you should, as a trader, be aware of. Then this is symmetrical triangle, then measured move up, all those things. This bear pattern, I trade bear and bull flag. This is, I would say, I use this a lot in my trading. I don't trade a lot of cup and handles and the other patterns. I know how they operate, but I don't rely primarily on a cup and handle. Okay, if a cup and handle is forming, I'll position myself and buy. And that's just me. You don't have to do the same. Cup and handle is found to be very good trade indicator. So you can read it up and just trade off of that. Similarly, I do trade this symmetrical triangle. I'll show you one JP Morgan trade, which I'll basically trading off of symmetrical triangle. This is bearish symmetrical triangle. This is bullish. Why bear and why bull? So if you see the previous trend, it's going from up, from down to up, and a triangle, then it follows the trend up. Here, prices go from up to down, a triangle, and then follows the trend down. So similarly, a bear flag is opposite of a bull flag. You'll see something like this, opposite of a flag. And that's how you know. So why this is, and so the beauty of this is you can trade either in the channel, you know that this is forming this, or you can trade right here, a breakdown, or here, a break up over here. And you know your stops. So your stop would be, if you are a very aggressive trader, you can probably put a stop here. If you're conservative, or opposite, if you're aggressive, you can just put somewhere here. If you're conservative, you can put somewhere here. So you know your levels. So these are not an obvious tool, or this is not something which is going to give you guaranteed success, but this will help your trading a lot, because you know what price is a good price, good as in which has higher probability to be successful, rather than just jumping in somewhere in the middle and hoping that the position will go in your favor. These, again, I'm insisting on that multiple times, that don't this will just help your trading in a way that it tells you what is a good point, or a highly probable risk reward point where you should buy or sell, instead of just jumping somewhere in the middle where your stop would be very loose, and you'll probably hope that, okay, let's hope that this goes up or down. Versus if you trade off of these patterns, these have been successful in the past multiple years, and it repeats over and over again, and you'll have precise stop or target points. So when I mentioned about the target points, so usually like this bull flag from here to here, if it breaks out from here, then usually the target is from this level to this level. These points, let's say this point was 10. Similarly, you can expect a 10-point move over here. So that's how a target of a bull flag is assigned. Okay, any question on these patterns? I can go over this example real quick of a bull flag. This is something which I did trade. So this is a bull flag DHR, and I think I shared this chart in the chart section of our channel too. But this is a very good example of a bull flag, like how we saw over here, this flag formation, a flag formation. And then when it broke out from here, it was good for, of course, this is the recent trade. I think this is, yeah, July 2nd. Closing prices are right here. But ideally, if everything goes well, from 120 to 170, 50 points. So similarly, from 164 or 165 to 50 points, around 205. So my target would be around 205. I'm not saying that I'm going to hold it till then. I think this was an option trade, so I'm already out. But if you were to tie a price target to this is how I will do it. And now, of course, questions would be, how do I get in, or where do I get in? Do you get in after the breakout over here? Do you get in right at the support over here? This again depends on trader to trader. If I can draw this channel up, or this flag up, and if it respects this support, then if I'm an aggressive trader, I'll probably place my trades over here in expectation that it will break out of this flag. But of course, talking about support and resistance, if I have bought over here, this will be an immediate resistance which I have to face with. So I might reduce my position, not get out completely, and see how it reacts. Otherwise, I can just wait for this confirmation, wait for a close over this flag, and then get in. Even then, that would have been very good entry, like 170 to at least 180 till now. So 10 points, pretty good deal. So it depends on traders' appetite or traders' risk appetite, how you want to position yourself. But this is how bull flags are formed and bull flags can be traded. I have multiple examples. Actually, I wanted to show, let me quickly go towards the JPM example, or JP Morgan. I wanted to show this symmetrical triangle. Okay. So this JPM, this was a chart. The bottom one, okay, the top one was on the way to 80. So this was shared on May 6th. On early, and this was shared on May 12th. Actually, this was, yeah. So this one was shared on May 6th, and prices were right at 90. And this one was shared on May 12th. This is kind of a symmetrical triangle. It had a breakdown. So that's why I put a price point as 80, on the way to 80. And the price at that time was around 90. There was about 10 points which one could have scored. I was actually in this trade. It ended up exactly at 82 on when, so before the trade happened, I was able to call out roughly the price point. Of course, all the trades don't go exactly how you plan, but this is something which I called out in real time because it had a breakdown from a symmetrical triangle. I knew what can be the potential target, and I was able to score a lot of points over here because of the fact that it was respecting this triangle, the symmetrical triangle breakdown. And why this is a bearish symbol? Because the trend, if you see, it's coming from up to down. The previous trend is bearish. That's why the breakdown from the symmetrical triangle can be bearish as well, or should be bearish ideally if you follow these chart patterns. We'll come back to that one. I quickly wanted to touch, yeah, the bear flag. So this is exactly symmetrical triangle. I'll show you one more example later for this bearish flag as well, which is beautifully being shown in one of the charts which I traded a couple of days ago. Okay. Any question on chart patterns and candlesticks before we move on to moving average?
One question I do have is there a particular website or a daily discussion of chart patterns that, for somebody who's not as, good as you, where we can go and see? I know IBD used to do it at one time, but what do you use? Do you do it yourself, or is there a chart pattern discussion every day that I can just go in and look?
No, I usually do it myself. I mean, trading for a while now, I think I've got used to seeing this myself, like bull flag is forming or what patterns are forming. I don't know of a particular site where it's being discussed on a daily basis, but usually there are some scanner site. I think Finviz is one where you can just put in a pattern. Like if you want to see all the stocks with the bullish bull flag, it will just spit out all the flags with all the stocks with bull flag formations. Similarly, head and shoulders and everything. I think Finviz spits it out. There is no discussion around that, but it's just a screener site which you can use to see all the patterns yourself.
So I have one question. So you see the bullish flag?
Yeah.
So how to identify that's a bullish flag or falling wedge? So both are looks like similar, right?
Yeah. That's a good point. It exactly looks similar. Here, I don't have an exact answer to that. The only reason being let me walk through an example, because usually if you see this price, you have to draw the upper trend line, or the upper trend line will be more parallel to the bottom one. Otherwise, if it's a wedge, it will just consolidate within this angled line. It will not be exactly parallel. That's the only difference. Otherwise, there are wedge patterns. Let me note that question down as well when we'll do our live trading, or not live trading. When we go over one of the charts, I'll try to point out when it's a wedge versus when it's a bull flag.
Okay, thank you.
Yeah.
Hey, Sarthak, and I have a question. So when you are drawing those lines, are you considering the age of the candle or the high and low of that day, like opening and closing amount of that candle?
Sorry, say that again. The first one was not clear.
Yeah. So when you are drawing the line on those candles, are you considering the high of that day or the closing and opening of that day to draw the line?
So this is usually the high of the day. It usually covers the wick as well. but most of the times it's high of the day. This, and it's an art. It's something which you'll probably see over time. You don't have to exactly follow that. Some of the folks I know, okay, I'll show you an example. Some of the folks I know, they just draw wick to wick. Sorry, sorry, this is not too accurate, but from wick to wick. But what I do is I usually draw at the body of the candle, or from the body of the candle. I ignore the wicks, because wicks is something the price have traded, but the close or the open is not on the wick itself. So I usually draw my candles from the body. Now the body can be open or close. In this case, this is open, but in this case, this is closed. So it's most, how I draw my candles or how I draw my trend lines is from the body, not the wicks.
Okay, got it. Thanks.
Okay. Let's move on. I know we have 30 minutes. So when we have, okay, a lot to cover. So moving averages, 200-day moving average, 50-day. I'm not going to go into the details of what is a moving average. Is basically, or just read it up yourself. What is a moving average? But I want to cover what is the institution support and what one can leverage during their trading. So there is a saying that nothing good happens below 200-day moving average. This is a proven institutional support area where most of the institution gets in and buys the stocks. So this is a very high level, or very, it's a trend line, or it's a high level trend, you can say. It follows 200-day moving average. I'll show you on a chart exactly what that means. Then 20 and 50-day moving average offer good long-term support. Now, folks might have question around simple moving average versus exponential moving average. I honestly don't have a clear answer to that. I've been using just the simple moving averages. I know folks use exponential moving averages for short term, but for longer term, they use simple moving average. So there is, again, this is an art. You can see what is good for you. But I'll show you what's the beauty behind this and how you can leverage that in subsequent slides. So why to use moving averages? You can time your entry and exit. It gives you a systematic approach. It's basically if and else psychology. Like if it is above this trend line, or if it is above this moving average, you just buy. If it comes below, you just sell. You don't have, it can be robotic trading. You don't have to apply too many things into your trading. Just moving average. Okay, if it's above, you'll buy. If it's below, you'll sell. I know a lot of good traders just do that and buy and hold based on the moving averages, and they do very well because you don't have to manage your trade a lot, and it can give you good returns in the longer time frame. Now, of course, it helps in riding winners. It helps in cutting losses. When I say riding winners, if there is a trend, if let's say you use 20-day moving average, if a price goes above 20-day moving average, you can just keep on riding it until it goes below 20-day moving average. Otherwise, if you don't use moving average, you don't know when to sell. You'll probably be good with 100%, 20% profit, 10% profit, or if you see a one bearish candle, you might just get out. But this helps you keep your winners for a long time. Similarly, the opposite is true, help in cutting losses. Now, how to use moving averages? Folks use 9 to 20 crossover cross downs for entry and exit. I'll show you an example, and also touches that moving average as support and resistance. And 9 and 20, it's just a number. Folks use 10 and 30 for short term as well. I know 21, I know 40, but I have been using this for a while, and I can say, yeah, if you use this for longer term trends or short term trends, you'll be okay. This is not wrong by any means. I'll show you an example. Okay, so this this is a crossover trade. So this blue line is 20 EMA and 9 line is, this pink line or red line, whatever you want to call it, it's 9. So if you see here, when I mentioned about crossover, 9 over 20, this pink line, which is 9, it crosses over 20 EMA here at this point, which is roughly about 260. If you are a trend follower, if you believe in just taking an entry whenever these moving average crosses each other, or 9 crosses above 20, then if you enter here, there is no close, or until now, until date, this 9 hasn't closed below 20. So that can be your exit signal. 9, whenever 9 closes below 20, you just get out of the position. So see for yourself, if you enter over here from 260 to 360, 100 points, you would have just entered here based on your system, you would have stayed in the trade right now. And even if it goes down, it won't go down like one candle, $100 drop. It won't happen. Ideally, it never happens like that unless it's a flash crash. It will base a little, then go down. So you will probably be stopped out somewhere over here, 340, 350. And that's good for about roughly 80 points. Otherwise, if you are not putting any moving average over here, first of all, you wouldn't have taken a trade over here. Maybe based on support and resistance, you could have, but you would have probably sold over here because this is a resistance line. So this helps you keep your winners for a longer time. This is a 920 crossover. And this is similar. Okay, I should have touched upon this. This is 920 crossover. 9 is crossing 20 from above. This is a bearish signal. So if you want to short here, you can probably short here. And it's good till this point, from 310 to at least 265 to 70. So this is the beauty. You can just ride the trends and you can just go with these crossovers. Similarly, this is, okay, ride the trend example. 9 and 20 crossover happened somewhere over here. You can see nowhere 9 is closed below 20 over here in this Zoom trade. So from 80 to 260 and even beyond, you can just ride the waves. When I say support, yeah, you can use moving average as support as well. You can probably say, okay, I want to buy. Let's say you are not here, you haven't entered the Zoom trade at all, and you want an entry in Zoom trade. So you can probably buy at a support, 20 EMA support, 20 SMA or EMA support over here when it held. Of course, it went down. You wouldn't have bought here, but here when it supports and it goes up here, you could have easily bought here till the time it touches 20 EMA back again. So this is good to take, or this is an entry point which you can take at a 9 or a 20 EMA support. I won't recommend taking 9 EMA support as an entry point, but an exit point, yes. The reason being 9 is too close to the price, and usually you might see a lot of stops, like here in this example. It went below, it went below, it went below. But 20 is something which is low risk, I would say, in a high trending stock. Everything is true for a down trending stock as well. I'm just showing some of the bullish charts, but everything is true in the opposite way, of course, for down trending stocks. This is a classic example why I mentioned about 200-day moving average and the importance. So this is simple 200-day moving average line. If you see here, and this is SPX or S&P 500. If you see here, this point, it held, went up. Here, it didn't touch. Here, it went down. So lots of people would have stopped out, and immediately it reversed and went up. Here, multiple touches. It can't go down. So this has been acting as support. Now here, one touch and boom, from here you could have. So this would be definitely your low risk entry because your stop would be just underneath. And here, when it went down, it tried to break out, it couldn't, and it just dropped. So usually the trend traders or long-term trend traders, if it's below 200-day moving average, they just get out of their position, they just start selling, and that's how they do until the trend reverses back up and it's above 200-day moving average. Because this is an institutional hold line. That's what I have seen, I've read everywhere, and it holds true. You can see for yourself. And similarly, it tried to touch, it couldn't. Next time it touched, broke out. And similarly, if you just use 200-day moving average for your long-term, I know somebody had questioned how to enter long-term stocks. This can be one of the tool. You can just enter, you can see whatever your favorite stock is. As soon as it goes above 200-day moving average, just buy and hold. And that will be a very good trade. And of course, you'll need to have some profit target or exit criteria, but that could be an entry. Okay. This was all moving average questions.
So now I have one question.
Yeah.
So on moving average, the regular moving average is very lagging indicator, right?
Yeah.
So which one you recommend, for the day trade, for the short time? Which one?
Yeah. Okay. I should have clarified. This is all for long term or a higher time frame. I do have moving averages on my 5 minute charts as well, which I'll probably show later. But this is for a longer term trend, or if you want to just hold for 3 months, 6 months, year or
Oh,
so.
so sorry. I'm talking about the simple moving average, weighted moving average. I mean, there's so many moving average, right? There's so many versions of
Okay.
moving
Okay.
average.
So for
Which one
short, yeah, for short-term trading, exponential moving average is something which is something closer to the price, and it doesn't lag that much. It's smoothened, and that's what I try to use. But for longer term, it doesn't matter. Weighted is this different. VWAP is totally different. Simple moving average and exponential. You can just use these two. For long term, you can use simple. For short term, you can use exponential, and you should be okay.
Okay, thank you.
And within that, do you use the 200-day or the 50-day? Those are the mostly used, right? The 200-day and the 50-day. I know you showed something unique, 9 and 20, which I didn't know much about.
Yes. For long-term trading, yes, just 50 and 200, if start using that. 20 and 9 is just for, I would say, short-term hold. Not short-term, this is for the trend. You can see how to time your entry and exits. This is just one of the tool which you can have. Ideally, the less, the more. Lesser moving averages or lesser tools on the chart you have, that's actually better for a trader. But this sometimes helps you to when do you want, like zoom stock, it's just zooming out, and there is fear of missing out for most of the folks. When do you get in? You just get in right now. What is a better risk reward? So usually 20 EMA or 20 SMA, it provides support for a momentum stock, and that's when you can buy your time in your entry. Okay, let's move to RSI. RSI is Relative Strength Index. Google just feel free to Google how it's done and what it's done. But usually how we use it, how traders use it is above 70, it's considered as overbought, and below 30 is considered as oversold. Don't use this as a single reason to enter a trade. This should be used as a supplement indicator. Of course, oversold can stay oversold for a long time. Similarly, overbought can remain overbought for a long time. Again, higher time frame signals have higher probability of success. Always zoom out, look at what's happening on higher time frame, and then take your trade. I'll show you a quick example on RSI. So 30, just remember 30 and 70. This is the golden number which we say.
Okay.
30 is oversold and 70 is overbought. I'm just going to show these. If you see here, this is the 30 line. This and this. And now, with respect to this RSI, as soon as it dipped over here, you saw that Apple's price had a almost hammer. I won't call it a hammer, doji formation over here, and it reversed exactly from here. Now, similarly here, this is the corresponding price point of Apple at this time. So Apple, as soon as it hit oversold levels, the buyers stepped in and just took the price up. Similarly here, buyers stepped in and took the price up. Of course, it went down after that. But if you look here, if you are putting in your scanners, give me all the stocks which have RSI less than 30. These are usually, if you apply this on a momentum stock or something which has proven to be successful in the past, usually on getting oversold, especially on a daily time frame, they reverse. Now they don't have to reverse immediately. You have to see what's the candle being formed on that level. Now, if I were to trade here on this very day, I did see that there is this candle. If you just see this candle, just one candle, this is not a very, very bearish candle. In fact, I'll wait for a confirmation. We did study about 3 candle reversal pattern, and this is a 3 candle reversal pattern. So the very next day, I know RSI was oversold, buyer stepped in. It's a 3 candle reversal pattern. The previous trend was down, and now there are high chances that trend might reverse or trend might start going up. So here is where I'll probably time my entry and hope, of course, anticipate a good buy over here. Similarly, this hit oversold levels. And if you see here, this candle, this is, I won't say Maribozu, but this is something, the price is opened over here, but closed over here. So see almost 10 points from close to open, or from open to close. And bears or bulls were very much in control of this candle. So this tells me that, of course, the trend is down, but this is a very good reversal candle. The next day, high chances are that the prices will reverse. It hit oversold levels and the buyer stepped in. So everything, these two, if you combine these two, it just aligns itself. You don't have to, of course, when I talk about the good points, if you see here, like we talked about oversold levels, this is way above 70. So somebody might just start shorting over here. But if you see the corresponding price, it went above from here. So as I mentioned before, oversold can remain oversold and overbought can remain overbought for a long time. But if you combine this with the price action, what's happening right here, you might be able to get in a very good entry. I honestly don't use RSI a lot, but if it's a weekly, if a chart is showing weekly oversold level, combining it at a support, let's say if it was weekly and if it was somewhere here, then I will add it to my watch list and see how the price is trading the next day to take a position.
So I have one doubt. So on daily, okay. So for 10 minutes time frame, if I see a overbought RSI, so and if I compare with a more time frame, and I didn't see it is below 80. So is so the basically that is I mean it may go down, or it does not give any good example. I mean it does.
Yeah, it's not a good indication if you just base your trade off RSI on a 10-minute. Yes, if it's oversold on multiple time frames like 5, 15, 1 hour, and 4 hours, then yes, there are high chances that it might reverse, not completely, but for a short day trade, you might get a good chance. In fact, I have coded, or I do have scanners in my Thinkorswim platform, precisely spitting out multiple, if it's oversold on multiple levels in one particular day, as in 15 minutes, 5 minutes, 1 hour. If it's oversold on all the three, then it gives me some tickers. Then I evaluate myself and before taking an entry. So oversold and overbought on a multiple time frame, that's something which I take notice of and then decide.
Okay, good.
Yeah. Cool.
Sorry, I missed that one part. Like, what is the chart below?
So this is RSI, relative strength index. Yeah.
Oh, yeah.
So if you see a 5 minutes chart is RSI is below 30, and you will see other time frame and compare, right? Which
Yes.
can go on again or not, right?
Yes, exactly. I don't just buy or sell based on 5 minutes oversold or overbought levels.
Okay, good.
Yeah.
Thanks.
One thing, I just was thinking, how would you read the dip in, say, around April, because the pattern did not go below 30.
Yeah.
But if you look at in between February and March, the dip took it below 30. When you are at the March level, what would you really do?
So a good question. The price over here were higher, but the RSI was oversold here. And here the prices are lower, but RSI is not oversold. So this is actually a classic case of divergence. This is a bullish divergence. I do have one slide which I mentioned that just read it offline. I was unable to cover all the things in the session, but these are RSI divergence, bullish or bearish divergence. This is where you might position yourself. People usually trade off these divergences where the price is not respecting the RSI. RSI is still kind of bullish as compared to the price. So this might indicate that a reversal is in picture.
That's what I thought. So would that tell you that there is, because the strength is so strong, it's not going below?
Yeah, exactly. Okay. But that's something, good point that you brought it up. It's good for a read. Cool. I'll quickly move on. I know we have few things to cover. So VWAP is intraday use only. It restarts at the beginning of each trading day. It gives you the trend for the day. VWAP does not change with the intraday time frame. If price is above VWAP, longs are advisable. If price below VWAP, shorts are advisable. So here is the meat. If a price
What
gap,
does VWAP mean?
it's volume weighted average price.
Okay.
And if a price gaps up, it usually finds support at VWAP. Before continuing back higher, traders position themselves for a potential VWAP test to go long. This is something which I use for my intraday trading a lot. I don't use it just alone, use this alone. I use it with multiple indicators too. But yes, this is a very powerful tool for day trading. Why? I'll tell you. I think I do have some charts over here. Okay, so this dotted line, this is VWAP. There's a CRM, some random chart. I don't know which date, but if you see this dotted line, this is VWAP. And here the price, this is 5-minute candle. So this, it never closed above VWAP. It closed here. Similarly, the second candle never closed. It went down. Here, this candle, it touched VWAP and it could have been shorted. I mean, if you are a very aggressive trader. Here, this is a very bullish candle. It went up, it broke VWAP. This candle retested VWAP, it didn't go down. Again, this candle tested VWAP, it didn't go down. This candle, it went down, but didn't close below VWAP. So VWAP was acting as support. And similarly here, it went up. And right here, VWAP, look how beautifully VWAP is acting as support. Now support, it broke, it went down. Now here, now you can see I'm not going to go over all the things just in the interest of time, but this is how VWAP is acting as support. Similarly, one more chart. This is Disney, some random chart. Again, the gray line is VWAP. If you see over here, this, okay, first of all, it never closed above, first candle it closed above VWAP, but after that went down. So whenever it's below VWAP, usually look for shorts, don't look for longs. That's how I approach it. Similarly here, it tried to test VWAP, or it actually tested VWAP, but went down. And if you would have shorted over here, VWAP resistance, you could have easily gained 114, 112, these many points. Similarly here, another test. It can't close above VWAP at all. This is how price is respecting VWAP. I also call out previous day high low. So if you see this red line and green line, this is previous day's low and previous day's high. I wish I could touch more on that, but since we are almost out of time, this is something which I use as well. This, if you see here, these prices respected previous day low. When I say previous day low, this is 1 day. This is 1 day. This is Thursday, and this is Wednesday. On Wednesday, the lowest price Disney went to was this, and that's plotted on this red line. So it respected that previous day low and it went up. So similarly, I see previous day high and previous day low as good support and resistances. And if they are combined with multiple supports and resistance, then the stronger your signal is. So I know I'm rushing a little. I want to leave chance for some questions. This is one combining multiple signals, like talk about combining multiple signals. RSI oversold. This is one trend line. And here we have a hammer candle with a confirmation. I actually entered somewhere over here. This is this is ROKU's 1 hour chart. So if you combine multiple things in one, support, first of all, support, hammer candle, and oversold levels. I'm not just basing it off of oversold levels. These oversold levels have been formed on a support, which I know have acted as a very good support in the past. If you see from here, this price, from here, it went till this price. So this is a very good low risk entry, in my opinion. If it goes south, you can just get out as soon as this break, and that's the price of doing business. So this is combining multiple signals into one chart, and this is exactly when something works like this, you actually feel, yes, technical analysis do work.
And I was going to ask you the percentage of success in the multiple signals working. I've been thinking about it. How does that work?
I mean, I haven't calculated it, but yes, multiple confluence zone gives you higher success rate. I'll show you Roku once I move to my trading platform. I actually anticipated one of the move after earnings that it will actually hit this price, and it did. It reversed from there because it was actually a weekly time frame level or weekly resistance level. But similar to this, if you get multiple time frames, multiple confluence or multiple signals, that's one to take note of and just go out or buy that.
Sarthak, one question here. If you see the top triangles, I mean the top green lines, they see like, I mean, they are slanting downwards, right? So does it indicate like it is forming a downward trend?
So you mean exactly this line?
Yeah, the top lines. Yeah.
So I'll show you, this is just an hourly snapshot. I'll show you once I zoom out what's the significance of this. It doesn't show that it's downward trend. Once you look at the weekly or a daily chart, it will be clear. I'll show you Roku in a bit. We discussed about JPM. Okay, this is so this is an example which I'm probably going to take a trade on Monday, or which we might. So remember I told you about a bear flag. If you see, the previous trend is down, and this is kind of a flag formation. It went down. Similarly here, flag, it went down. Similarly here, right now, this is where we are. So my anticipation is that again, if it breaks 31 levels, it might test 20. But if you break it down to the hourly level, I'll show LYFT, Roku, I'll note it down. If you look at the hourly level, it's actually forming some support because we have a gap fill over here and it's actually respecting this trend line. So based on how prices react on Monday, that's one trade which we might enter into. Of course, this is a bear flag. It might break down. Breakdown means puts and the price point would be there. There is a chance that it might be a failed breakdown. So we'll of course stop out. And if it shows bullish signs over here, then we should be good for at least a few points. So this is a classic example of bear flags. Like you can probably trade as soon as the bear flag breaks over here. And then similarly here, that's a very, very strong pattern in bearish stocks. Okay, those are all the slides I had. Let me analyze one ticker real quick. Okay. You guys have a ticker in mind which I should?
Oh, we cannot see.
Yeah. Can you guys see now?
Yes.
Any ticker which you want me to?
Yeah, we can check
you do
Facebook.
Roku?
Okay, I got Roku first. This is my other, okay. Can you guys see the screen?
Yes, we can see.
So this is Roku. Okay, all the lines are already drawn over here. Let me move to the other chart. Here. So I'll start with the longer time frame, or the higher time frame. See over here, I'll see automatically, once you are accustomed to using these trend lines, automatically it will come to you. This, then if you see over here, multiple points, I'll look for multiple points touching over here, this, then this, it never closed. So remember I said that I'll touch most of the bodies. I won't see the wicks. Now, if you see over here, one thing which comes across or comes out is this resistance. Okay, I know this is very, very important resistance over here from this horizontal and the angle trend line as well. So now when I go down to the daily time frame, I see how prices are. Okay, I know this is a very important resistance. If it breaks out, it's good for a lot more because this is a weekly, just like KWeb. I'll show you KWeb is already. It's exactly similar. So like KWeb, this was from multiple time frames or multiple trend lines 1 and 2. When it broke out, it had an impact. Similarly, Roku, once it breaches this 132 odd levels, it will have a big impact, or it will be good for multiple points. So Then I go down to the lower levels to see how or where can I score my entry if I'm already not in. This looks like a decent support where we are right now. I think I called out in the trade somewhere on the channel as well, like 128.5 levels. This is pretty good. Then 5-minute chart, if you see, it is holding that line, which we've drawn on a weekly time frame, which is decent. If it breaks down over here, then 5-minute next entry, possibly somewhere over here, because multiple touches, then this. I think 127 levels, and most likely if you draw, I know those are a lot of lines, but once, believe me, once you are into it, you're just into it. You'll start seeing multiple patterns. So let's keep this here, as in I'll keep these lines here and we'll update on the thread if we see respect of this channel, but usually it respects somewhat. So here is where we can probably bounce and then go up. Of course, this is all anticipation. This is not something which is 100% true or which is going to be 100% true. But that's how I break it down. So 5 years, I have few scanners. I'll share those. I think I've shared those scanners. I'll scan overnight. Actually, I have prepared. Okay, so next session, I was planning to do on psychology behind trading and post-market analysis, like how do I screen for stocks and what exactly go about, or how do I look for stocks. Some of them are my go-to, like these Roku, Netflix fans, all these. But some of them are given to me by my post-market analysis stock screeners, and that is something which I plan to share in the next session. Before that, I think you should all read up about gaps, failed breakout, breakdowns, stops, RSI divergence, and some details on candlesticks. This will be very helpful for you guys in the long run. Okay, I know we are short on time. Questions?
I want to tell you one thing. In TradeView right now we can add chart candle patterns. Do you know that? I just want to let you know that.
As in, we can
yes.
add.
Yeah, we can add. So can you go to indicators? Can you go to indicators? Try to add an indicator. There you can see. You see candlestick patterns. VC4. That is real time.
Oh, interesting.
I just want to let everyone know that. That's all.
That's good. That's good. Thanks for sharing.
Yeah.
I know it's time, but could you do one for Netflix just to get your view on that?
Yeah. Okay. So Netflix real quick, weekly. As I mentioned in the slides, draw some of the basic support and resistance. This is very, very clear. Comes across as clear resistance right now, or support, because it has broken above. Similarly, these are multiple candles over here when it broke out, and now this is 450 level. Yeah, that's what I thought. So now it's all blue skies. I'll go in the daily. See here. This daily. I think this is all blue sky right now. So it's very hard. There are tools like fib retracement levels to find out what is the exact price point or what are possible target levels. I'm not going to go in that, but a good entry might be somewhere here 455, 456 if you get lucky. But I think earnings are in the next couple of weeks. Unless we have a very red day, we're probably going to consolidate and move up before the earnings. If things go south, then a low risk entry might be 390 is a very low risk. I don't think we are going to get there anytime soon. But yeah, somewhere over here, 450 first, and then over here, 420, 415.
Hey, Sarthak, this is Sumiran. I just wanted to thank you so much for doing this. And just one question is, we talked a lot about charts and all of that. Do you ever take fundamental guidelines while ever trading?
Very good question. No, I don't. That is something which I never do. That being said, I don't trade any random stock. I do trade very high volume, which has the stocks which have high volume. Usually high volume stocks are decent, are liquid, and they don't go bankrupt right away. And the fact that my hold period is not that much, I usually don't look at fundamentals at all.
Okay, thank you.
Yep.
So do you consider Greeks?
No, I don't. That's something which I used to study, but just because of my hold period, I don't consider Greek. I do look at the implied volatility. I don't want to get in a put or a call where the implied volatility is more than 200, 100. I want to be considerate of that, but I don't look at all the Greeks by taking an option position.
So you will not get into the position if the IV is more than 200%, right?
But definitely not. Even above 100, I try not to. But with a very high momentum stock like ZM, Netflix, sometimes it is over 100, and I don't expect myself to hold that for very long. I'll just I'll just get into a position and get out if the IV is very high.
Okay, thank you.
Yeah. Okay. I think Zoom is not disconnecting, so I'm open for next 15 minutes. I know it has been a rush. Those who have more questions can stay.
Can we look into Facebook if possible?
Yeah. All these charts, I'm trying to show you how I create. Otherwise, this is what I use. I already have a bunch of, look at this. This is my ongoing analysis. I know this looks like a mess, but if this is what I do most of the evenings, I just chart and chart because that's how you get better at it. So Facebook, first of all, weekly time frame, I know that it had a breakout of this. This was the previous zone, 220 levels. Yeah. So it went to all-time highs, went down and then recaptured immediately after, which is very bullish. Even now, it is consolidating before. I know there are a lot of negative news with Facebook. One question I get is, do you trade off news? I don't. I think charts are enough. Charts tells you, of course, you can predict news with charts, but at least it gives you low risk entries or exit. And if you respect that, you don't need to trade off news. So look at this. This is a support which held and it clearly bounced off this level. Of course, now you might think that I'm drawing it in the hindsight. My line was not here before. Now the price is here. That's why I've drawn it over here. But believe me, even next time this line is probably going to be respected, and it does one after a while. Like ROKU, it respected all those lines. This one, so I clearly see. Now look at this hourly time frame. 1, 2, 3, 4. It went up. It couldn't stay up. It went down this much. This is a failed breakout. And now here it touched, but it goesn't. So 1, 2, 3 is, this is a very important level, 240. If it breaks out, just get in. Otherwise, these are called gaps. There is a hollow candle, or there is no candle or no action between this 235 and 233. Usually gaps get filled. If you want to draw here, this is a very good support. See, automatically price will respect these lines. 1, 2, 3, 4, 5, so many points. This is beautiful support over here right now. So 233, 232 levels, this might be a good entry at current point. I don't know. But since this has been respected for a while, I hope that it holds. And usually when it holds, it will go up, consolidate here, and then boom. That's
it's
how
above its 200-day moving average, so it should be a bullish pattern. So in other words, it's not gonna go below that 210, at least the resistance, become a support now.
You can't say. I mean, of course, there can be a news or something, or markets just crash. It can go, but the chances are it is going to stay bullish because it's over 200-day moving average. So yes, you're right in that sense.
So when there is a gap up, you're saying it is going to be filled somehow?
So all the gap ups, yeah, exactly. All the gaps, whether it's gap up or gap down, it usually gets filled. It's not going to get filled immediately, but in the near future. So I'll tell you, I usually look for gap fills as potential entry and potential exits. So here, okay, if I was, so this is a gap. Let me, never mind. This is a gap over here. This price went down, went up. Here, if I was trading on this day, and saw that Facebook is probably building a bearish candle over here, I would have probably bought some at the gap fill. It was not an exact gap fill. But see this wick, it almost touched this level, which is kind of gap fill level. And here buyer stepped in and just took over the price. Of course, next days it went down. That is something which I would have stopped out. But I look for gap fills to time my entry, because that usually gives you a good entry. Because most of the traders, I mean, this is not just my knowledge. I've seen that, heard about this, and seen it work multiple times. The reason it works is because folks from around the world have been looking at those gap fills as entries and exits. So there is bound to be some action.
So when there is a gap up, you will wait until it's filled to take a position, or you can still take a position?
No, I can. It depends. If it's on a 5, so this is on hourly chart. You don't usually get those gap filled immediately. If it's a 5-minute gap up, I might wait for it to fill. The rules are varied. I can't say if I'm going to, if I'm not going to. It will depend on other support and resistances. So this line was acting as other support as well, in addition to the gap fill. So that will have given me additional positivity around this trade. So look at this one while we are on gaps. This is a gap, even though it's a small gap, but this is a gap. So prices went up, filled the gap, and it went down immediately. So it exact this level, I think, to the penny. So just look for gaps and see how the prices react. Okay. 10 more minutes. Questions?
So you are a full-time day trader, or you have a job and you do this?
No, I'm not. I do have a job.
Sarthak, if you're looking at charts, can we look at Teslas, please?
Yeah. Oh wow, Tesla. Tesla is making money for folks. This is going to the moon, as they say. So look at this. The very good entry would have been, this is a monthly time frame. Very good entry, very low risk, 367, and it never looked back. It came and retested this and then went up. So right now I don't have a price target here. I can do some fibs and see, but all the price targets are usually, oh my.
What are fibs again?
These are fib retracement, fib levels. Usually you see that with, it's related to science. You see that fib levels being respected day in and day out. This 0.618 level, 1.6 levels. Just do fib trading on YouTube. You find multiple videos. And these are usually respected. It's not even funny that how fib levels are respected. If you see, so usually they are, I don't want to go into fibs, but usually they are from lows to highs, or highs to lows. I drew this from this high to this low. And if you see here, the prices respected this fib level, this 0.786 fib level. It touched here and then broke out. So usually on the fib levels, you get some action. I don't trade off of fibs. Fibs usually I do for some price targets, but I won't say that I do a lot of trading using fibs. And I don't recommend using fibs immediately. I know I've overwhelmed you guys with a lot of trade technical indicators, but the less is more. So start with basic support and resistance, even without drawing any of the moving averages. Maybe just have a 200-day moving average, just to tell you where the longer term trend is. So this is how I will go about drawing Tesla. See how I just, while we were chatting, I just drew some support and resistances, and it is clearly respecting that. So as soon as this broke out of this channel, or this is a pennant, this just went out. So I think one of you had question around pennant or a bull flag. So I think this is an example around, this is a pennant. So you see, if it would have been a bull flag, the bottom, there's something I had to create. I don't see any channel or a bull flag. There is very little difference, or you can call this as a bull flag as well. So there is very little difference between a pennant or a bull flag. But this is very good entry. I think this is where 1014, it just went up and never looked back. And I think there is one good news or some news about Tesla over the weekend as well. So I'm expecting another gap up. Okay, 5 minutes. More questions?
Can we say Google if possible?
Yeah. Yeah, Google had a gap fill. It went down. I think I was trading this live. Let me show you Google since so yeah, Google. If you see here, gap fill, while we were on the gap fill topic, this filled the gap. It couldn't close above, it went down. So this is a bearish sign. Depending on how we close or how we close on Monday, if we break out of this, it's bullish because we filled the gap and we still didn't reverse. We just broke out. Honestly, if markets stay well, I'm expecting it to break towards all-time high because I think this is the only FANG which is not yet broken out, and usually this is not behind everybody. So if it closes above 1488 on Monday, that would be a very, very, not just closes, if it trades above 1488, that would be a low risk entry for at least a 1530 test or beyond in coming future. Wow.
Thank you.
Yeah. One last thing on Google, I had this weekly chart put up on this March low, tested exactly this point, 1000, and 1000 is usually 1000, 100, 200, this round number. It's a psychological level. I'll cover that in the next session, the psychological level too, but this would have been a very, very good entry from 1000 to almost 1500, and it respected that support on a weekly time frame. Okay.
Can we take a look at Boeing, Sarthak?
Yeah.
And Spike too.
Yep. So Boeing, this, as we know, let me go. I know I have drawn a lot of clutter over here, but okay, let's stay over. This pink line is 200-day moving average. As you see, the trend is definitely down. Everything is below this. That being said, of course, if you buy on a weekly support, you can still score some points, but for a long-term hold, it's not advisable to buy if something is below 200-day moving average.
We are still seeing Google.
Really?
Yeah.
Oh, I'm on. What do you see now?
Same, Google.
Now?
Yes, now we can see.
Okay. So yeah, this is 200-day moving average trading below. You should not be in the trade for a long time. So this is forming as a support. If you see this, and one thing which I want to call out, if you don't see any support resistance, you don't have to find one. Usually it's very obvious support and resistance, you would see it at one go. You don't have to keep on looking at the chart. There are hundreds of tickers, thousands of tickers which you can trade. You don't have to trade a commodity or a stock where you don't find any support and resistance. So that being said, if you see here, this has respected this, then I can go in the hourly. 1, 2, 3, 4 multiple hits. Then here, it's not a very good pattern. This has too many gaps, too much volatile, cluttered. I don't call this a very very good chart to trade off. There are hundreds of better or stronger tickers to trade. That being said, if you want to still take an entry, this is a channel, this channel, and this bottom channel. You can probably take an entry if it comes somewhere around 150, which will be, if you see this line, this is a support, ding, 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 ding. It went up. And now next time when it tests somewhere around 155, 156, or this line, just like ROKU, this might be a good entry long. Okay, I think we are 30 seconds into 3:45. I'll probably be closing now. So
thanks, Sarthak, for everything.
Yep. Thanks.
Thank you, Sarthak. It was a good session.
Thank you, Sarthak.
Thank you, Sarthak.
God bless you.
Yep. Thanks, everybody.
Yeah.
Have a good day.
Same to you.
And would you mind share this slide?
Yeah, I'll share the slide and the video. I'll upload it somewhere and share it. Give me a day.
Yeah, sure, man. Sure. This is really a great session, man. Thank you.
Cool. All right. Thanks.
Thank you.